Here's how I look at it from the perspective of working in financial services and working within the system on a regulated basis, and I have for years. Suing the SEC is a really bad idea. It virtually never works. They have unlimited resources. It's a bravado thing to do, and I'm sure others in the industry are applauding this. But the outcome is never good because they don't like getting sued, and they have tremendous powers to avoid being embarrassed. And trying to embarrass the regulator into submission, well, Pomp, that just doesn't work. And so this is not the path of least resistance. And I do not want to, comment on what they're attempting to do, other than saying, from my point of view, as a personal opinion, it borders on insanity. It's not a good playbook, and I think if I were on that board, I would be pretty noisy in the boardroom about this. Now, having said all that, I'm more optimistic on other strategies in terms of getting some policy in crypto. And we should talk about the next 6 months, because you've got lots of evidence now of bipartisan interest in getting some policy in place. Not in a combat way by suing regulators, but in a way in cooperation on a bipartisan basis. And let's make it real easy, okay? We're not going to get everything regulated overnight. We may not get an ETF in the US for 2 or 3 more years, but that's not the only thing that matters. What I'd like to see, and a lot of others too, would take one asset, a really bipartisan asset, in the form of stablecoin. Now, not all stablecoins were created equal. We know the meltdown in Luna. That story is well known. Algorithmic-based, stablecoins may not be the best idea. Be very hard to launch another one. But assets like USDC that are backed by the US dollar have not broken a buck recently. And if that was made and was allowed to be regulated, it could become the default payment service for the world.
Hello and welcome to Money Talks. In today's video, Shark Tank star and popular businessman Kevin O'Leary updates about Bitcoin, inflation, Fed's poor policies, and the economic turmoil in 2022. He also speaks about regulation in crypto, the future of stablecoins, and why Biden's approach towards solving current economic crisis is wrong. Make sure to stick around to the end of this video where Kevin O'Leary shares his thoughts about the future of Bitcoin mining and carbon credits.
Unfortunately, for Biden and the administration, there were some policy mistakes made early in the mandate over 2 years ago, particularly around energy. There's 2 pressure points that are causing all of this political activity. One is inflation on energy. $5 to $7 gasoline per gallon is just a killer when it comes to midterm elections. There's no getting around that problem because people see that every time they fill up their truck or car. And then, of course, protein. The food supply chain in the U.S. from chicken on down is up between 30 and 48%. So food and energy are very political in nature because you're forcing families to spend so much more of what they make on things that they never had to worry about. Now they do, heating their homes and just feeding their families. And so it's very difficult to reverse the mistakes made in energy. Let's start there. Canceling the XL pipeline, canceling leaseholds on federal land, shutting down offshore development, canceling the activity that was going on in Alaska, which was very prolific in terms of providing gas and oil, really making it hard to figure out carbon costs if you're using any kind of fracking service. And so all of a sudden, of course, we're no longer energy independent. We're in a perverse situation that even before the Ukraine war, we had Russian tankers coming into the Boston Harbor. So that's policy mistakes, and takes time to fix that.
Kevin O'Leary also reiterated his viewpoint, claiming that the productivity, transparency, and efficiency of blockchain technology are immense in the long term. In his view, the ongoing bear market might stay for a while, but eventually it will pass. He expects unprecedented institutional capital in cryptocurrencies, to fuel the next bull run, advising investors to be patient as extraordinary outcomes take time. On that note, the Canadian praised Warren Buffett and Charlie Munger as great investors, but their vision of crypto is wrong. Over the years, the CEO of Berkshire Hathaway has labeled Bitcoin as rat poison, while recently he said he wouldn't buy all Bitcoins in the world, even for a mere $25.
There's no question there's going to have to be more disclosure. There's going to have to be more transparency. But the truth is, and this is something the entire industry has to really get their head around. If we can get some policy, even though it will require additional compliance costs, more disclosure, more transparency, it opens the floodgates of institutional capital that have been waiting to come into the crypto market. Just in a payment system alone, let's say 4 or 5 different stable coins got licensed, it would be a phenomenal outcome because you would, for the first time, be able to get a 1 or 2 or 3% indexed allocation from sovereign funds running $500 to $900 billion, the kind of guys that I service in the indexing business. I'm not the only person doing it. There's lots of others. But we talk to these funds all the time, and they say the same thing over and over again. Give me some policy, show me I'm not offside with the SEC, and I'll give you a 1% allocation, sometimes a 3% allocation. That goes for Bitcoin, that goes for Ethereum, Solana, Polygon, stable coins. Just give me a regulated position. That's all they want. So for all of the angst and all the headaches and everybody worrying and gnashing their teeth and rubbing their hands together about disclosure, who cares? Let's get this policy done. And if you want to see Bitcoin $100,000, that's how you're going to do it. You're going to get the sovereign wealth funds to allocate to it. I'm a believer in that. That's why I stay long in these troubled and difficult times. But I'm 100% compliant. Everything I touch is regulated. Whether I own an exchange in a country like Canada or trying to buy a license in the UAE, I'm working with the regulator. I don't want to be a crypto cowboy. It just shows you what happens when you're a crypto cowboy. You get wiped out.
In addition to opposing Buffett and Munger, O'Leary touched upon the numerous failing projects in the crypto space like Terra. He's not surprised that such protocols collapse since they are running by weak business models and bad managers. The space will be a better place when it gets rid of the idiots that diminish its strength, the Canadian concluded. We should be celebrating this purging.
Well, you remember this problem started about a day after the original memo from the SEC about 5 months ago talking about carbon credits being audited. And so basically what's happened since is, and this is a little complicated, but the data is irrefutable now. When you set up a mining operation, as we had multiple public miners last year, they were being used as a proxy by institutions to buy Bitcoin because the price of the mining shares, whether it was a Hut 8 or a Riot or Marathon, and many others, really was a great proxy for Bitcoin volatility. You bought those shares, Bitcoin goes up, the shares went up. Bitcoin goes down, the shares go down. It was almost a perfect correlation, regardless of how many megawatts each of these companies had mining. Nobody cared about the source of power at that time. But then along came that memo, when basically what it said is, look, if you're a public company, you got to get your auditors to sign your public statements. And we're going to add a little attribute. If we have our way, we're going to actually, if you're using carbon credits or offsets, we're going to have you sign that too. And basically what the SEC was saying is they were calling BS on carbon credits. So many companies said, look, yeah, I'm using coal or flared gas to mine Bitcoin, but I bought an acre of the Amazon. It's got 1,000 trees, so it's an offset. Well, the SEC said, get me an auditor to sign that. So if you call any of the big 5 audit firms, they're not going to sign that because there's no ledger to carbon credits. It was that day, and I won't forget it, when I started getting calls from the larger sovereign and institutional accounts that were using the index to strategize holding Bitcoin by holding the public miners. And wow, were they dumping stock. So, I mean, they read the writing on the wall. A lot of these companies are going to face bankruptcy because they levered their Bitcoin mining
The Shark Tank star has predicted that trillions of dollars will flood into crypto from institutional investors once the regulators adopt a crypto policy. He believes that crypto will become the 12th sector of the S&P. In June, O'Leary revealed he is holding 32 positions in the digital asset space and is not selling any despite the crypto market sell-off. "I'm not selling anything. Long term, you just have to stomach it. You have to understand you'll get volatility and that some projects aren't going to work," he emphasized. So, what are your thoughts about Bitcoin mining and the future of stablecoins? Tell us in the comments below. Also, don't forget to like and subscribe. I'll see you soon with the next video, and thanks so much for watching.